Okay, hi. So for whoever who came in, like just came in, just let me know again if you can see and hear my screen and me. And if not, I will begin with today's webinar, and we will be giving you a sort of a brief understanding of our basic concepts of trends. So I guess this is something that most of you would be already quite familiar with. So I guess what I can do here is try to make it as insightful as I possibly can. So I am foreseeing that we might potentially end this session pretty early today. So later, Cloris will come in and do some technical analysis on whatever charts you might want her to take a look at. Or yeah, so if anytime you have any questions, any charts you want us to take a look at, do drop it in the comment section down below. So if not, I will start today's session. Okay, so here's just a very brief look through as to what we're going to be touching on. So just give you an understanding of the definition of a trend, what kind of trends we're looking at, as well as some decisions you can make depending on what kind of trends the price is making. Okay, so I guess most of us will understand that a trend is really just basically the direction in which price is moving. So it could be moving upwards, downwards, or prices could really just be ranging. So as most of us would know, prices don't actually move in a very straight and clear upward direction. And in fact, it is very, very often that prices move like that. So in a zigzag fashion, upwards or downwards. Okay, so one thing to note is that when we are looking at trends, we tend to keep in mind the direction of the tops and bottoms. So we'll take a look at what I mean here. So in this case, you would see that we are making higher highs as well as higher lows. So that is a very, very clear sign of an uptrend, right? And here we will take a look at one pretty recent example, I would say. So you can see that we have higher highs as well as higher lows. And you see that price has tested this trend line once, closed twice, thrice. And on the fourth time, this trend line was not successful on holding price up. And we noticed a bearish breakout. Right? So in this case, what you can expect is for price to plunge down, right? And I guess one thing you might want to note is that before really solidifying whether a breakout has happened, you might want to pull out the volume chart over here at the bottom, you see here. And really just make sure that you are seeing more red bars in this area here. Right? So you see, for example, in this case here, right, we see a very, very strong uptrend. So one thing you will notice on volume chart is that you're seeing a lot more green bars as compared to red bars. So that sort of confirms your bias that price is moving in an upward fashion. So conversely, for here, you're going to realize that you see a pretty not so common spike in the number of trades of sold positions, right? So that will kind of signal to you that a breakout is about to happen. Okay, so now previously we're looking at the weekly trend, right? So now if we zoom in into the 4-hour time frame, we're going to realize that this trend line still holds. In fact, prices are actually going to test this trend line and be a lot closer to this trend line. So you see that it's actually reacting off the trend line a lot nicer. And if you zoom in into this area, you realize that at the initial breakout, there will always be a push-up that follows that is always the strongest. And it will resist of this previous ascending trend line support, right? So you see previously it used it as a support here, support. But now that it has broke out to the downside, it is going to use this ascending trend line as a resistance line, right? So whenever you're doing your retracements, you're trying to find your sell entry, you can potentially tag it to a line that is in line with your previous ascending trend line, which has now turned into a descending sort of a resistance line. Okay, so now we want to look at how to spot prices moving in a downtrend. So I guess pretty similar to what we were talking about before. So now you will want to observe lower highs being made as well as lower lows being made. So that will kind of confirm your downward bias. Okay, so now we'll just take a look at an example. So this is actually a trade that happened very, very recently. So I think we talked about this last week or something. And you see that we have a very, very strong descending trend line. And why do I say that? It's because prices actually touched once, came close, touched twice, thrice, fourth time, fifth time, sixth time, didn't really break out. And finally, on the sixth time, it made a very, very strong bullish breakout. And you can expect a very strong push up to happen here because this trend line is really, really strong because prices has been abiding by this trend line for a pretty long time, I would say close to a month, in fact. So whenever you have a very strong trend line, you can expect the breakout to be one that is very, very strong because you will need a lot of buying pressure to counter this descending effect on price. Okay, so far so clear? And now we will be moving into our third price movement, which is ranging. So I think previously we talked about how the euro dollar also was kind of facing a ranging movement, especially last week because of all the turbulent macro news, right? So we can take a look here. It may be a bit confusing for this case is that if you happen to be in a very short time frame, right, you're going to notice that you might think prices are going to move in an uptrend, and later when time passes, you're going to realize that, oh, could it be a downtrend? And you will just be stuck in this repetitive kind of bias thing. However, what's important to note here is that if you are starting to realize that prices are just moving up and down with no very prominent, clear trend, what you might want to do in this case is to zoom out. Right, so let's say if now we're currently on the 4-hour time frame, you might want to take a look at maybe the weekly or the monthly and take a look at whether this is just a consolidation or is it a proper long-term trend. Okay, so here we have an example of the Kiwi Yen on the 4-hour. Let me just write it here. Kiwi Yen on the 4-hour. So this is one area of consolidation that we observe. And you notice that price is pretty much stuck within this range, right, for about a day or so. Let me see. Yeah, it's about a day, and nothing much is happening. But let's say, however, you're looking at this current period now, and you happen to be on 1-hour time frame. What is likely to happen is that you're going to be very, very confused as to what on earth price is doing, right? So I guess another thing I pointed out here. So this is one thing I want you to look at. The second thing I want you to look at is this little triangle we have over here. So I guess previously what we talked about ascending trend line, you have to look for higher high, higher lows, and descending trend line, you look for lower highs and lower lows. So in this case, you're going to realize that you can very nicely draw an ascending trend line. However, at the top, we have this like flat plateau looking line in which price actually reacts from. This is often might be called sort of a triangle, maybe a wedge. And in this case, you see price is kind of narrowing down into a shorter and shorter range. So that is possibly where price is consolidating, and you can expect a bullish breakout of this zone or a bearish breakout of this zone. So so when prices actually break out of this ascending trend line, you can expect prices to plunge. Right, so this is one of the patterns or users of ascending trend lines in which we tend to look out for. Okay, and one thing to note is that typically when we're using trend lines, we kind of assume that prices tend to follow them unless we are proved otherwise. So unless we have a very clear signal that prices has reversed. So what we like to do is, let's say prices are moving in an upward fashion. So currently we are at this point. What we would think is that price is going to bounce up, right? So we're going to use this as our buy entry. However, let's say now we're currently seeing on the volume chart a very, very big fat red bar saying that people are starting to sell a lot. So you might kind of think, hey, is it possible that is it possible that people, the sellers are starting to take over, right? However, you cannot really confirm until you see that a bar has formed and properly formed below this ascending trend line. Therefore, that is what we call a clear signal telling you that price has reversed. So we wouldn't necessarily put our sell entry here, right, until we confirm this thing has happened. So we wait for this to happen before we sell. Okay. Oops. So this is an example of a reversal in trend. So we've been proved that price is actually going to make a bullish breakout of this triangle consolidating here, right? So therefore, we can place our buy entry at above one candle, right? So you can put your buy entry here. Okay, so now I guess one thing you might ask is, so what if we know the trend? What are we going to do about it? And in the case of an uptrend, of course, because we want to follow the trend, we would buy, right? And in the case of a downtrend, similarly, because you want to follow the trend, you would sell. So however, when prices are ranging, you would be a little bit more conservative, because you never know whether prices are going to make a breakout from the upside or breakout to the downside, right? So therefore, in this case, what I think would be wiser to do is to stay out of the trade. Okay. So finally, I guess one thing we might want to take note when using ascending, descending trend lines is to take note of the bigger picture. What is the bigger trend, right? Because let's say if now we're on the monthly time frame, we see that the overall trend is moving up. We know that prices move like that, right? So let's say prices is currently like that. Okay, and we zoom into this zone. We call this our 1 hour. Right? So what we might want to do in this case, if we happen to want to short, is to perhaps do a little bit more of a better trade management, better risk management, because we are going to notice that the trade that we are currently taking is not in line with the bigger trend. It's not in line with the bigger time frame. So we could possibly take a smaller position or something like that. Okay, so here is an example of the dollar CAD. We're looking at the 30 minutes time frame. All right, so you're going to notice price is not really making much of a very distinct pattern. Maybe perhaps you might guess that this is a descending kind of movement, right? However, if you zoom out and take a look at your 4 hour, you're going to notice that we are actually looking at only this area here, right? So as what we always say, we always look at the zigzag pattern. So even though price may be in a more of a bearish zone currently, the overall market structure is that prices are moving up, right? So this is what we always see. And we confirm this by further zooming out into our monthly time frame. And you will notice that prices are actually making very, very nice, thick, fat, green charts. Okay, so finally here, I guess this is really just to reinforce and to summarize what we talked about thus far, is that within each of these movements, there are always smaller movements and smaller, even minor movements. So one thing that we really have to keep in mind is that if you happen to be a day trader or something like that, you're looking at a 4 hour, 1 hour, you always want to start from the monthly time frame, so that you get a sensing as to whether the overall structure is a bullish or bearish one, right? Before you do your proper trade management, in case your shorter time frame is contradicting your long-term time frame. Okay, so with that, I end my webinar, and we'll let Cloris bring you through the technical analysis for today.
All right, guys. Hi, I'm Cloris. So as usual, I think I will just start by showing you some of the good setups that we have identified. So of course, we will look at gold, right? Since lots of us have requested for that in the past few days. So let me just exit from the slides. All right, let me just close the volume. Okay, let me pull out my graphs. Okay, so we will start by looking at gold. If you guys have any question for Janelle just now, you might want to ask now, or if you don't, then I can move on to my graphs, okay? And at any point of time, if you have any questions, please also feel free to type it in the question box. Yep, all right. So let's go to gold, XAU, USD. So what we usually do, we always start by monthly, right? Okay, so, but for some of you who have been following us for quite a long while, you might be very familiar with our process. So again, on a monthly time frame, we see that there's actually an overall bullish bias, right? Because we see that on a monthly time frame, this entire graph is actually holding up making higher highs and higher lows as well. Okay, so this is actually the overall bias that we have. But of course, if we were to look at a more short-term time frame, more towards our recent time, you can see that there's actually a small so-called pullback here, so a very small adjustment at this stage. So this is what we have on a monthly time frame. So let me just erase the markings and let's go down to the weekly time frame. Okay, so on Okay, so on a weekly time frame, you can see that we are actually seeing a bullish trend line here. Okay, not a very nice one. Let me just adjust it. Okay, and then you can see that. Okay, so overall, from the time frame since May 2019 to about February 2021, there's actually more of a bullish bias. But in recent times, since August last year, our gold is actually making somewhat of a bearish bias here. And then there's a slight so-called bounce back here at this point. Okay, so this is what we have on a weekly time frame. So if you'd like to do some levels, marking out of some key resistance or support level, you can do that. So let me just show you. Okay, so at this point, the most recent swing high would be here. So I will label this as a weekly resistance. Okay, and then a more recent swing low would be this one. Okay, just make sure that when you are marking out your weekly resistances or support level, make sure you are marking out areas that are more recent. But of course, you need to allow for some leeway for you to mark out even lower levels when you zoom into the daily and 4-hour time frame. Okay, so let me just put this as a weekly support. Okay, then we go down to the daily and see whether our levels are still relevant. Okay, so as you can see, the levels being marked on a weekly and weekly time frame are still pretty relevant here because we can still see them on our graphs. So let me just add on to the labeling and add in day. Oh, sorry. Okay. Yep. So you can see that they are still pretty, they are still holding up very well. And then you can see that the prices are kind of making a small retracement back from this level here. So again, there is actually quite a strong small resistance here because we see that prices have tested it once and twice. Okay, so we can put this as our perhaps another daily resistance, and then again we go down to our 4-hour time frame, which is the time frame that we usually look at for some proper key levels. Okay, and then you can see that these levels are no longer valid, so we might want to tag them back to the swing low, swing highs. Okay, tag them well. Okay, so on a 4-hour time frame, you can see that the more so-called key significant levels are shown as here. Okay, this is a daily resistance, and then we have another big weekly resistance over here. We have our weekly and daily support here. But if we were to zoom out to this level, like if we were to look at this base only, okay, we can kind of see a small bullish bias here as what we've already seen on a weekly time frame. Right, we see that there was a small bullish bounce here. So of course it would be shown on our 4-hour time frame as well. So at this point, we can kind of draw an upward trend line support from the swing low to swing high and see. You can see that prices have tested it once. Oh, sorry, let me get a pen. Okay, once, twice, and then you have thrice, 4th times, 5th time, 6th times. So prices have tested this level, although there's more of a, kind of some fluctuations here. But prices did not actually break through this support level. So, and at this point, you see that prices are actually making a small retracement to test our support level. Okay, so at this stage, we might be able to establish the view that prices may not be able to break through the support, the ascending trend line support, and is likely to bounce back to our very strong, daily resistance, which is also our H4 resistance, because we are still seeing that it's quite close to our current level here. And even if we were to tag it closer to here, it's still a pretty so-called a valid resistance. Okay, so right now what we are waiting to see is that we need to wait for the candle to fully form, right? When it reaches this point here, when it reaches our trend line support here, and we see whether the candle will actually break through or whether it will bounce back. So if the candle touches the support and bounce back, then it would be a good time for you to put a buy entry. Okay, let me just tag the levels. You can perhaps put a buy entry in line with the trend line support here, maybe closer to the price level at here. Okay, or if you want to do it here, okay. And then let me just label this as an entry or pivot level. Okay, but in the case where prices actually break through this trend line support, okay, it might swing towards here. Okay, let me just label this. It might swing towards a horizontal swing low level, and we call this a swing low support. So if we were to tag the line all the way back to here, you can see that it was originally, we call this an overlap support, horizontal overlap support, because originally prices were testing this line as a resistance. Let me label this as a support. Okay. And then prices have tested it a few times over here. And then finally, it rallied up all the way to our daily resistance, come back to test the levels, okay, and wasn't managed to break through the levels. And all these prices here hold up very well with our ascending trend line support. Okay, so this could potentially be our stop loss if you were to put this trade as a buy, a long trade. So we put it as your stop loss. Yeah. Okay. So on overall, this is okay. Let me just put this away because it's too far away, and then let me see whether there are some other key levels. Pull out. Okay. So on a 4-hour time frame, it does seem to us that these are our 3 key levels. So you have your potential take profit here if you see that prices will actually bounce back from this stage. So let us go down to see whether we have we can use any indicator. Let's see whether we can use stochastic and see. We always adjust the settings. Okay, for stochastic wise, let me see. Oops, sorry. Okay, for stochastic, it does seem to us that there's a slight reversal, a bounce back here. But in this case, it's not holding up very well, because what we usually look at stochastic is that we always identify some very key hidden support here if prices, I mean, if the stochastic indicator has actually tested this level for a few times. But at this point, it seems that there's already a slight reversal here. Okay, so in this case, if the stochastic is not a good choice, perhaps we can use some MACD or EMA. Okay, and then let's adjust the settings a bit. Let's see whether 21 is it a good one. Perhaps we can try 34. So let me see. Okay, so in this case, EMA, even after adjusting, it does seem to us that prices have already gone down from the EMA here. So then we are left with MACD. So MACD, in this case, the signal lines are actually holding above the 0 line level. So as long as the signal lines are holding above the 0 line level for MACD, it will suggest to us that the bias here is more bullish, at least in the 4-hour time frame. Okay, so yep, this would be our so-called analysis for gold. Okay, so at this point, do you guys have any question? All right, if you guys have no question, I will just move on to the next one. Okay, so that would be gold. What's next? Let me take a look. Maybe we can take a look at pound dollar, since Janelle actually went through that as an example for trend lines. Okay, so for pound dollar, maybe we'll start with a daily time frame. Okay, on a daily time frame, we already see a very good trend line holding up, right? Maybe let me change. Oh yeah, it's actually a support turned resistance trend line. So that was also what Janelle has shared with you. Okay, so let's go down to the 4-hour then. Okay, so if we go down to the 4-hour time frame, again, this trend line is still holding up very, very well. And originally, this is supposed to be a trending trend line support. But then at this point, when prices have finally broken through, okay, this ascending trend line support, this support actually kind of translates to a resistance, okay? Because you see that if we were to adjust it better, right, make sure that it touches all the candlestick, you can see that prices have very well resisted of this area here, which is in line with our resistance here. Okay, so what you can do now is that we might potentially see a downtrend at this point. Okay, but of course we need to so-called follow the price actions closer and see whether the candlestick here would actually be bullish instead. So at this point, because we have established the view that there's actually a support turn resistance here, then we might be able to say that there could be a potential drop from here. So where would be a better entry level for you? Oh, okay. I just saw a question on from Juhyung. If I pronounce the name wrongly, please pardon me. You asked for analysis on dollar yen. All right, I will settle that after this, after pound dollar. Sorry. Okay, so this could be a potential sell entry level here, because you see that prices have already is very close to this level but hasn't broken through it, and it's likely that because this was originally a support level, right? But it's likely that when prices break through this level, this would actually become a very significant resistance, so-called a pullback resistance. Okay, so this could be your sell entry. Sell entry. Okay, and then a take profit level could be this one, a more near, like a recent one, because you can see that this is actually a small swing low level, and it's also very well in line with our trend line. Okay, so this would be your potential take profit. Okay, and then other take profit levels, if you are more patient and you're more risk loving, you might want to wait for prices to act more, and another take profit level could be here or even here. So again, we always tag our levels to significant swing low levels in this case, because we are looking at a sell entry. Okay, so another level, your stop loss level could potentially be here. Okay, because it's in line with our trend line resistance, and it's also a slight swing high, horizontal swing high. So this could be your stop loss. Okay, so at this point, we can try to look at whether there are some key Fibonacci levels. So we would take a retracement. So to support our sell entry, we can potentially take a retracement from this level, okay, this level to a swing high. So in this case, it would be here. Okay, let me open up the 61.8 or even a 50%. Okay, so you can see that, okay, I will actually keep the 61.8 because it's actually a so-called a level that's so-called more significant for retracement. And we will actually wait for prices to approach this level, because you see that there's kind of like a red candlestick forming. So in case where it breaks through this, it might take support at the take profit level. Okay, I might want to actually put my take profit slightly lower, just to make sure our risk reward are inconsistent. Okay, so again, if we were to use the same retracement line and open up other levels and see whether it would match up our take profit level, okay, we can take a look at perhaps either the first level here. Okay, it was originally in line with our 100. So in this case, because retracement wise, we can't take the 100 level, so we might want to shift our take profit level even lower to be more in line with our Fibonacci retracement of 127.2. Okay, so in this case, maybe I can delete this. Okay, so let me see whether we can take other levels. So for stop loss, we can also take a retracement from swing high to swing low, and then we open up. Yep, so you can see that again, for our stop loss, if you take a retracement from this point to this one, you can see that it lines up pretty well with the 61.8%. Or rather, let me try the 50%. Yep, it lines up better with the 50%. Okay, so at this point, we would have rather strong, Fib levels to support our key levels. And then you can take other extension levels as well, but I think at this point it's quite good to go. So if we see the candlestick or the price action actually breaking through the sell entry level, then it might support our view that it's time for us to put a sell entry at this point. So please watch out for this. Okay, so indicator wise, in this case, we might want to look at, again, if we do have indicators to use, we can use some of those. If there's no indicators that are useful, then it's not always needed. So in this case, we can use EMA, and you can see that prices have already react below, like cross the EMA at this point and react below the EMA. Okay, so it might support our bullish view. Okay, so at this point, this is our analysis for pound dollar. So if you guys have any question on this analysis, feel free to put it in the question box, or else I will move on to our next trade idea analysis on dollar yen, as requested by one of our audience here. Dollar yen, let me take a look. Yeah, dollar yen, okay. Yeah, so for dollar yen, we were just looking at this analysis this morning, right? So I will just share with you my views, but of course, again, just some disclaimer here. All of the info being shared in this webinar are meant for educational purposes only, so please don't take it as absolute trade advice. Okay, so let me just clear away everything, and then we start from a higher time frame. We can look at a daily time frame. Okay, so on a daily time frame, you can see that there's actually a good actually I can use a ascending trend line that can hold up very well all the way back to the start of this year. So if you were to go down to the daily time frame, you can see that dollar yen has been bullish for since the start of January till, let me just take a look, till 8th of July, so about early July. So for the whole of 6 months, it's been bullish and it's been holding up very well on this ascending trend line support, because you can see the prices have tested it a few times, right? So once, twice, okay, we have like third, fourth, fifth, and then this would be 6 times, 7th time, 8 times, and then finally at the 9th times, prices have broken through the ascending trend line support, and it's likely that this will be turned into a resistance. Okay, so put it as red. Okay, so at this point, what we are seeing is that prices are already starting to retrace back, because you can see that if we were to go down to a 4-hour time frame, right, you can see that prices at this point have started to make a slight downward trending pattern. Okay, so you see there was an ascending trend line support, and then now it actually becomes a descending trend line resistance at this point. So what we are seeing now is that there could be a likelihood, right? We might expect prices to so-called resist off this area here. Let me just tag it here. So this area here could be a swing low support turned resistance, or if we were to tag it closer to here, right, you can see that this could be a potential horizontal overlap resistance, because originally at this point it was a swing low support, a swing low, and then now prices have kind of started to reverse from this resistance level. So this could be a potential horizontal overlap resistance. Okay, so let me just take away the markings. Okay, so what we mean to say is that if prices will resist off this area, then it might be a good point for us to put a sell entry. So let me just put it as sell entry. Okay, so one so-called another take profit level that you might want to look at this point, because there is not much of a significant swing low unless you were to put this. Okay, but this is actually a very small area here. Okay, so what we're seeing now is that if you want to put a so-called a short-term trade, you might want to put a buy entry here, right? And we expect that prices may actually resist off the resistance here, somewhere here. Okay, maybe we can take a retracement at this point just to find out where we can put our take profit. But of course, we can see that because on overall, this is actually a descending so-called trend. If you want to put a very small trade here, please be careful just to reduce your position size. Okay, in a case that it doesn't bounce back this level where you can take your profit to put a buy entry, then it would be more risky in that case. So if you were to take a short-term trade and put this as a buy entry, then one potential take profit level that you can take, right? We can try to actually find that out by taking a retracement. Okay, so again, as always mentioned by us, we usually look at the 61.8 level, right? Because it tends to be so-called a very key level. But in this case, it's also possible that prices may bounce back to this level here because it was originally a support level. So maybe we can take a closer look at a more nearer level. And then we can also take a retreat, an extension from here to here, and then to here. Maybe I will open up the 61.8. Okay, maybe, let me see. All right, this one seems to be a closer one. Okay, so at this point, there could be a very small chance for you to put a take profit here for it to bounce back. Okay, but in this case, of course, it's more risky to do that because overall our bias is still bearish. So what you can do for now is that maybe you can wait for the prices to react more and see whether it would perhaps retrace back to the resistance level and then continue to go down. So personally, I would say that for dollar yen, I would actually hold for a while just to see whether the take profit level here, right? Because it's actually a resistance, right? And then if this resistance, if prices go up here and reaches our resistance level, and then it continues to go down, then we might be able to take another so-called Fibonacci levels, right? Let me just clear away. So what we can do is that perhaps we can take retracement from this point to this point. If this is so-called our levels that has been established as a key confluence level. And then again, because retracement-wise, 61.8 tend to be a very strong, in this case, let me just open up the 1272 level. Okay, and then to support it, we can also take some extension. Again, for extension wise, you can see that the 61.8 level actually lines up very well with the 127.2 Fibonacci retracement. Okay, so in this case, this could be our take profit if we were to put a sell entry at the first resistance area. So in this case, we might be betting that prices will actually go down from here. But again, we will have to wait for the prices to react more, right? Because at this stage, we are still unsure of it. Okay, so in this case, if you were to put a stop loss, this could be one potential stop loss level, or even you can peg it even higher. Okay, so at this point, let me see whether we can actually take a whole retracement all the way back from here. Okay, let me open up the okay, looks like a 50% would be a better one. Okay, so yeah, at this point you can actually tag it even higher. So it does seem to us that it lines up very closely to the 50% of retracement. Okay, so this could be our potential stop loss. Okay, so again, on overall, on a 4-hour time frame, our bias for dollar yen should still be a more bearish one. Okay, so because at this point, prices is not making significant adjustment here, there is a chance whereby this may swing back to the first resistance and then go down, right, touches the take profit. Okay, so I would suggest that we hold our trade for dollar yen at this point. Okay, yep, so that's our analysis for dollar yen. Do you guys have any question? Okay, so if you guys don't have any question, I will just continue to move on. Oh wait, let me see whether, hello. Let me take a look in case there are any things that I have kind of missed out. Okay. Okay, so I have one question from Naveen. Do you have any webinars planned for technical analysis in general? Yes, we do. So for a like a regular week, we have webinars from Monday to Thursday. So for Monday and Wednesday, we have one again, it's a 1-hour webinar. So the first half of the webinar would be fundamental analysis and the overall so-called economic outlook. Being briefed to you. And then for the second half, an hour, there would be a live trading session whereby we will be introducing to you some of the good setups for that day, or we will also be willing to take any requests. any pairs, any forex pairs from you. Yep. So Monday and Wednesday would be so-called exclusive webinars that would be dedicated to these two things. And then for Tuesday and Thursday, like today, it would be more of content and theory. And if there's any time for technical analysis, we'll also be doing that just like now. Okay. All right. So hope that answers your question. And we will move on to our next one. Let me take a look. What can I walk you through? So we've done dollar yen, pound dollar, perhaps, and then we've also done gold. Then maybe we can take a look at DXY, right, the dollar index. Okay, so for dollar index, let me just take a look. So for dollar index, I will, silver. Okay, we've been just asked for silver. All right, so we'll take a look at that. All right, so we've been suggested that we can take a look at silver XAG. All right, so let's take a look at it from a monthly time frame. Okay, so on a monthly time frame, there is not much of a clear trend. Okay, that's actually a very flat kind of adjustment trending, sideways trending here, consolidation at this stage. And then at this point, there is a small, very slight bullish view here, but then it seems to us that prices have broken through this point. Let me put it as green dotted lines. Okay, so on the monthly time frame, there seems to be a small bearish view here, and then let's scroll down to the weekly time frame. Okay, so again, on a weekly time frame, our trend line is not holding up that well anymore. Okay, unless we shift it closer. So it's okay, we just delete this. Okay, so on a monthly time frame, it seems to us that there's actually some sideways trending here, because you see that this is not a very clear triangle, but at this point you can see that prices are actually making like a small fluctuations over here, and then it seems to us that prices have already kind of reversed from this swing low support, but we are not entirely sure because this candlestick has not been fully formed yet, and then it has not actually broken through the key levels here. So let me just put some tagged out some key levels and see how they would appear on lower time frame. So there's a weekly resistance. Okay, and then this could be our swing low support. Oops. So let me take label this as a weekly. Okay, so okay, this is actually quite a strong level, so let me just tag it here. Okay. All right, let's go down to the daily time frame and see. Okay, so on a daily time frame, it seems just that this line has already been broken. So let me adjust it better, tag it closer, tag it here, and then I'll change the labeling as well. Okay. Oh, sorry. Yeah, daily. Okay, so again, tag it closer because the level has already been kind of broken. This seems to be a pretty good level. Or if you look at even a nearer time frame one, this could be a better swing low level. All right, so let's go down to the, at this stage, maybe we can perhaps take some fibs just to support them, right? So it's retracement. Okay. Could hold up well with our 78.6. Oh, slightly broken through. Okay, the 88 level of retracement is not always used, but in this case, it does suggest that it's actually holding up very well. Okay, so we can keep this level as here, And then perhaps we can take an extension to support our resistance, daily resistance. And then open up the 100, perhaps the, yep, okay, lines up very well with our 78.6. Okay, so on a daily time frame, these are our main resistance and support. And then we go down to the 4-hour time frame. And then we see that the levels will have to be tagged even closer. So this would be, okay, never mind. Just keep it there because we'll be looking at even closer levels at this point. We put it support here. Okay, at this point, it does seem to us that our daily support is actually too far away. Okay, so if we were to actually pull out our graphs even further, it seems to us that on a 4-hour time frame, our bias is more of bearish because you can see that prices have kind of made lower highs and lower lows, right? So let me put it as a bearish trend line. Okay, so at this stage, we might see prices to continue dropping or declining from here, right? So at least on a 4-hour time frame. So what you can do now, there could be a potential sell entry level here, right? We take it to a very small swing low here. Let me take a look, right? Any key levels, okay. Okay, so we can tag our sell entry at this point, which is a small swing low. This one potential sell entry. Okay, so this would be a potential take profit. Our daily support actually is still a pretty good support level even on a 4-hour time frame. Then that could be our take profit level. Okay, so what we are seeing now is that we are waiting for prices to actually approach this point. So what if it approaches this point and bounce back, right? So in this case, we will have to be more careful and then put perhaps a buy entry at this point. But as of our analysis now, we are seeing that prices actually hasn't really broken above this descending trend line resistance here. So, and prices are already making some drop or fall here. So we might be able to see that there would be a bearish breakout at the sell entry level, and it would take support at this swing low support here. So if you were to be more, maybe more perhaps risky, you might want to wait for prices to act even further. Let me just take away the previous fifth level that's no longer valid. And then we might pull out and see whether, this level here, we just tag it and try. Okay, this is very small here. So you can see that, that you can actually take profit at this level, which is a more so-called a safer bet because it's in line with our horizontal swing low support. But if you want to, hold it longer and see whether it will drop further to the second take profit here, because it's also in line with our small swing low here. Okay, so if you were to take a retracement, let's see whether it's in line with any levels. Okay, so you can see that our second take profit is actually quite well in line with our second take profit. And then let's take an extension. Maybe we can look at this or even this one. Okay, so you can see that for take profit wise, if you want to be safer, you can take it closer. Okay, just to make sure that it's in line with our 127.2. But you can also see that our second take profit is well in line with the 161.8 extension level. Okay, so this would be our so-called analysis for silver, right? So you can see that sell entry would be tagged at this small swing low here, and we wait we just hold it and see whether prices will actually break through, and potentially it would take profit at the first and second take profit area. Okay, yeah, so just nice. Time's up. All right, so this would be our analysis for the day. And do you guys have any question regarding the pairs? And okay, thanks, Weibin. All right, if you guys don't have any question, let me just do a slight promotion here. Okay, so if you guys go to the XM webinar page, and then you will be able to see the 100% of deposit bonus. So what it means is that if you were to deposit any amount, up to $500, you get a 1-to-1 so-called add-on to your amount of deposit. So if you deposit 500 USD, you get an additional 500 USD to be deposited to your account. But make sure, please take note that the that additional 500 USD, that bonus, will not be, you can't actually withdraw that to be used as cash, but you can still keep it in your account as an amount for trading. Okay, so it will be available from 2nd to 31st August. Basically, it's actually a National Day promotion for this entire month. All right, so that's the end. That will conclude our sharing for today. So yeah, thank you, William, and thank you, everyone. Please stay tuned to tomorrow's webinar. That would be on fundamentals and technical analysis. All right, thank you, guys.